So early 2023, when I started my investment journey, I made a whole lot of mistakes. It is not my fault and neither your fault too if you have made these mistakes starting out. My name is Casmer Celestine. I'm not an expert, a guru. I'm just a young man rebuilding my finances. Join me in my quest. Let's build financial consciousness together. It is said that the more you get used to something, the better you become at that thing. So let us learn together. Here are 7 top mistakes newbie investors make and how to avoid them. So if you haven't subscribed to my channel, please like, comment, share, so that when I upload content like this, you will be the first to see it. Let's get back to the video. Number 1, don't invest in things you cannot explain to someone else end to end about. Mostly upcoming or newbie investors run into deals on a short note without proper evaluation or due diligence or well-calculated impact of a specific deals. Oftentimes, this leads them to huge losses. A wise man said that if it sounds too good to be true, probably it is. So earlier this December, one of my friends got scammed by one of his online friends. So the online friend asked him to give him $20, that he's going to give him $1,000 in space of a week. So my friend asked him, what kind of investment is that you put in $20 that you are going to get returns of $1,000 in space of a week? So the online friend told him it's a forex investment without no clarity. And my friend said within him, he know that this is not possible. So how stupid he was. So he decided to give it a try. So long story short, he was blocked after 2 days. So my reason for this story, it can happen to anyone in any sector. Even if the business looks genuine, still do your research. Some of these research are the services they provide, their long-term business goals, how does the business bring in money, and all that. Number 2, do not do deals out of emotions. Newbie investors get into deals because it is my friend, it is my brother. When it comes to transactions that requires funds and investment, you need to be professional. Take your time, bring in the right people if needed. Do not rush into deals based off of emotions or trying to recover from a lost techniques. You will end up losing more. That is why you must build your emotional intelligence. The numbers of deals you have access to, the more professional and less emotional you become at making them. Listen to me, let me recap. The numbers of deals you have access to, the more professional and less emotional you become at making them. So this one has happened to me so many times. I discovered that whenever I lose money out of an investment, I usually run into the available deals just to make that money back or make that capital back. And it usually end up in further losses. I think my crypto guys can relate until I built my emotional intelligence. Number 3, do not put all your eggs in one basket. Newbie investors put all their capital into one portfolio. For instance, you're a stock investor and you have 500k to invest. Instead of you to diversify into 2 or 3 companies and grow little by little, instead you use your entire capital to purchase one individual stock. Let's say maybe a stock like MTN for the NGS. When it crashes, your entire portfolio will be in zeros. So learn the principle of diversification and work on it. Also, diversify into multiple streams of income gradually. A doctor can also have an importation business on the side and also be a realtor. 2 to 3 stream of income is okay for a newbie investor. Number 4, do not overinvest. Newbie investors often overinvest because they are fond of the word invest. Do it this way instead. I call it the 75% 25% investment rules. Put 75% of your investment in something you are well knowledgeable about and something that you can control, like a business. Then you can spread the other 25% in things that you are willing to take risks on. The crypto, the stock market, the forest. I say again, 2 to 3 stream of income is okay for a newbie investor. Do not overwhelm yourself. Number 5, newbie investors often buy cash appreciating assets rather than cash flow generating assets. Let me explain. when you are starting out, you need a flow of cash. Buying an asset is good, but know the type of asset you are buying. Assets are classified into two. There is a cash flow generating asset and there is cash appreciating assets. Cash flow generating assets, example are buying a home for rental purposes, Airbnb. While cash appreciating asset is buying an asset and waiting for its appreciation before you sell to make profit. For instance, land banking, when you buy a portion of land in a rural area and wait for 5 years to sell, most times the land doesn't offer any value within that gestation period. So know the difference. Number 6, newbie investors are often quick to sell off their investments. For those in stocks and crypto, once the market is down, newbie investors often panic sell their investments. The wealthy never do that. Once the market is down, they go back to their investment fundamentals. Be it real estate, crypto, stocks, they go back to the drawing board to analyze the possible scenario of staying down in a long term. They might come up with new strategies to accumulate more of that asset if there is glimpse of future rise. In the stock market, it is called buying the dip because they know that investment is all about patience and wealth is built over time. Finally, number 7, investing based on what is in the news or what a content creator says. Information is good, but do not be quick to react to any news or what is said by a YouTube content creator about a certain investment. Do your own investigation. Do the analysis yourself. Until then, do not invest or sell off your investment based on what is in the news or what a YouTube content creator said. Let the risks come from you. Nobody can make you rich but yourself. We as content creators are not always right in every situation. Just like stocks, before it starts getting all the hype by content creators, it might has already been overbought. We have come to the end of this video. If you follow these top 7 mistakes that I made and avoid them, you will go from a newbie investor to a pro investor, because it is only information, strategy, and implementation that separates a newbie from a pro investor. Thanks for watching.